Alright crypto fam, Zacchy here bringing you another Zacchy crypto update straight from the heart of the market. Today we're zooming in on a project that's been quietly building serious strength, Kaspa. We're talking about a nearly 70% supply lockup, a phenomenal signal you absolutely need to understand. This isn't about hype, it's about deep conviction, and what it means for the future price of Kaspa. What's up crypto fam, and welcome back to Zacchy Crypto Update. Today we're cutting straight to the chase and shining a spotlight on Kaspa. In a market often driven by quick pumps and dumps, Kaspa is telling a very different story. A story of quiet, steady accumulation and unwavering long-term conviction. This is a crucial distinction, and it has massive implications for Kaspa's future price action. We've just received some fresh on-chain data, and it's a game-changer. It reveals that nearly 70% of Kaspa's circulating supply hasn't moved in over 3 months. That's a new all-time record, and it's happening while Kaspa firmly holds above a key support level near 10 cents. Now, why is this so significant? Let's break it down. Think about it like this. In traditional markets, when a significant portion of a company's shares are held by long-term investors, not constantly traded, it signals a strong belief in the company's future. The same principle applies here, but with an even greater impact in the volatile crypto space. This new data shared by Kaspa Daily showcases a compelling trend. We've got a chart that perfectly illustrates this. The blue line tracks the percentage of Kaspa supply that's been untouched for 90 days or more, while the gray line shows Kaspa's price. What you'll immediately notice is that from mid-2023, right up to late May 2025, this locked supply has consistently climbed from under 50% to almost 70%. This isn't a fleeting trend, it's a sustained upward trajectory. What truly makes this remarkable is how this long-term holding behavior persists even through market volatility. We saw sharp drawdowns in January and February 2024, right? But guess what? That long-term holding percentage either held steady or increased. This is a stark contrast to typical speculative crypto assets where panic selling often dominates during price corrections. This tells me, and it should tell you, that a growing segment of the Kaspa community isn't just holding, they're convicted. They're not chasing pumps, and they're certainly not panic selling. They see Kaspa as a genuine store of value with a long-term vision. So why does this matter so much for the Kaspa price? It's simple supply and demand. When nearly 70% of the circulating supply is locked away, it drastically reduces the available supply on exchanges. Less Kaspa accessible for trading means that any increase in demand, even a moderate one, can lead to a much stronger, more rapid price reaction. It creates a scarcity effect. It also points to a profound level of holder conviction. People are treating Kaspa not as a quick flip, but as a foundational asset, reflecting deep confidence in Kaspa's robust roadmap and its highly anticipated upcoming milestones. And speaking of milestones, let's talk about what's fueling this long-term conviction. The Kaspa network is not just about fast transactions, it's a Layer 1 blockchain poised for significant technological evolution. A major catalyst for this strong holder sentiment is the imminent launch of smart contract functionality. Kaspa's roadmap includes smart contract integration, and this is a game-changer. The community is buzzing because we're preparing for the launch of Kasplex's public testnet. This is a massive step forward, bringing smart contract capabilities to the network sooner than many expected. For those unfamiliar, Kasplex L2 is a Layer 2 solution designed to enable Ethereum virtual machine-compatible smart contracts through a based roll-up architecture. What this means is that while Kaspa's Layer 1, the base layer, handles transaction ordering and data availability, Kasplex Layer 2 will execute those complex smart contracts. This is how Kaspa is addressing the blockchain trilemma, achieving high throughput, or speed, without compromising on security and decentralization, now adding serious programmability. This is huge because smart contracts are the foundation for a whole universe of decentralized applications, also known as dApps, DeFi protocols, NFTs, and much more. Imagine the potential. When Kaspa gets robust smart contract capabilities, it opens the floodgates for developers to build on its ultra-fast, secure, and scalable block DAG architecture. This expands Kaspa's utility far beyond just a medium of exchange. It positions it as a true platform for innovation in the Web3 space. The community's optimism, as echoed by Kaspa Daily, is very strong, and it's driven by these tangible future developments that promise significant ecosystem growth. Now, as your trusted crypto analyst, I always aim for a balanced perspective. While the long-term outlook for Kaspa looks incredibly promising due to its supply lockup and smart contract development, it's crucial to acknowledge every aspect of the data. And there's one metric that gives us a slight pause for thought: liquidity on MEX. Another update from Kaspa Daily highlights that spot liquidity for Kaspa on MEXC, which is one of Kaspa's largest trading venues, is 3 to 4 times thinner than on other exchanges. This is notable because MEX still accounts for roughly 20% of Kaspa's total trading volume. What does this mean for you, the trader or investor? This mismatch, where a high-volume platform has thinner order books, can lead to an increased risk of slippage. Slippage happens when your trade executes at a different price than you expected, especially on larger orders. It can also lead to more sudden and volatile price swings and, in a worst-case scenario, it raises concerns about the potential for manipulated price action during larger trades if there isn't enough depth in the order book. So if you're trading Kaspa on MEXC, or if you primarily rely on price signals from MEX, you need to be acutely aware of this liquidity mismatch. It doesn't negate the long-term fundamentals, but it's a short-term risk factor to manage. Always look at the order books before placing significant trades, and consider diversifying your exchange exposure if you're concerned about liquidity. So, bringing it all together, what's the big picture for Kaspa? We're seeing a powerful combination of factors setting Kaspa up for a new phase of growth. First, that nearly 70% supply lockup is a fundamental strength. It reduces selling pressure and demonstrates a community that truly believes in the project's future, not just short-term gains. This level of conviction in crypto is rare and incredibly valuable. Second, the imminent smart contract functionality via Kasplex is not just a technological upgrade, it's an economic catalyst. It positions Kaspa to capture a significant share of the dApp and DeFi market, which will drive demand for Kaspa as the native token for gas fees and ecosystem participation. The network's ability to scale rapidly with aspirations of reaching 100 blocks per second makes it a formidable contender in the Layer 1 space. While the MEXC liquidity concern is something to keep in mind, it's a localized issue that experienced traders can navigate. It doesn't overshadow the profound underlying strength suggested by the on-chain data and the development roadmap. The combination of strong, bullish community sentiment, expanding utility through smart contracts, and this unprecedented level of long-term holding paints a clear picture. Kaspa is steadily gaining ground, driven more by its solid fundamentals and growing utility than by speculative hype. While short-term price movements can always be unpredictable, remember, crypto is volatile. Kaspa's long-term holders are quietly shaping a very bullish market structure. With almost 70% of the supply effectively taken off the market and major technological advancements like Kasplex on the horizon, Kaspa truly appears positioned for significant growth in the coming months and years. This is a project that's building for the long haul, and its community is reflecting that conviction. And finally, a very important reminder, my friends. The cryptocurrency market is highly volatile, and all investments carry inherent risks. The information provided in this video is for educational and informational purposes only, and does not constitute financial advice. Always conduct your thorough research, understand the risks involved, and consult with a qualified financial professional before making any investment decisions. Never invest money you cannot afford to lose. Your capital is at risk. That's it for today's Zacchy Crypto Update. I hope this deep dive into Kaspa's unique market dynamics gives you a clearer perspective. If you found this breakdown valuable, please hit that like button, subscribe to the channel, and turn on notifications so you don't miss our next essential market insights. We're here to help you navigate this exciting world of crypto, one informed decision at a time. Until next time, stay safe, stay smart, and keep those portfolios growing. Peace out.